MicroStrategy, now known as Strategy, expects to raise nearly $1 billion from the IPO of preferred stock that pays a 10% yield. The company plans to use the proceeds for general corporate purposes, including buying more Bitcoin. Join us now is Michael Saylor, Strategy Executive Chairman. You've described some of these moves, these financial moves before to us, Michael. Is this more of the same, or is there anything unique or different about this round?
You know, what's exciting here is we've done 3 IPOs of preferred stocks in the past 6 months. Strike was our first convertible preferred, and that was up 29%, while all the other preferreds were down 6%. Strife was a fixed preferred, paying 10% fixed yield at par. That's up 22% versus all the other preferreds down 4.5%. So Stride was the third of those preferreds. And what's going on here is we are offering fixed US dollar yield, and we're swapping it into BTC yield, which is what our equity investors want. The big breakthrough is that in the preferred market, the capital never comes due. There's no refinance risk. We're basically offering a perpetual US dollar yield forever. We're getting the capital forever. And so by matching a very long duration instrument on the liability side with a long duration asset, we're creating, in essence, an indestructible balance sheet. And these preferreds are a very scalable, extremely low risk way to generate leverage to drive a very large premium into the MSTR stock. So it's a win for the fixed income investors because they're getting a yield 400 basis points more than typical preferred stocks or junk bonds would yield. And it's a big win for our equity investors because they want more Bitcoin, and this is a way to get leverage without worrying about any kind of bond coming due.
Wow. You obviously are the ultimate hodler. You would buy, if you have money, you buy Bitcoin, I think, don't you? It doesn't matter whether it's up, down, or flat.
150% Bitcoin, Joe.
Do you think at this point that there's, let me just say to you, what are you waiting for at this point in terms of good news? I think the regulatory environment since the election is definitely improved. We've talked about how much harder it gets to mine, and there's halving. When is the next halving, and what are the next moves that it would cause the asset Bitcoin to get to some of these? I don't know whether you have Tom Lee type projections. I think Tom the other day said eventually it could get to 2.5 million per coin or higher before we never really will get to mining the last coin, will we? Not in our lifetime.
Not in our lifetime, but the last 6 months have been tremendous. All of the fundamental planets have aligned. Bitcoin's been acknowledged as the one digital commodity in the world by the administration. The banking regulators have given a green light to bank Bitcoin. The accountants have upgraded the accounting to fair value accounting. There's been a surge of Bitcoin treasury companies. There's like 100 public companies or more that are holding Bitcoin on their balance sheet, and every single week there's another announcement. I think that, you know, it used to be we're focused on the halvings, but at this point, the entire natural supply of Bitcoin is only 450 Bitcoin available for sale every day. That's sort of about $45, $50 million a day at this level. That is all being consumed by the Bitcoin treasury companies, and the Bitcoin ETFs are coming on strong. So I'm very bullish. My forecast in July of last year in Nashville was Bitcoin's going to appreciate 29% a year on average for the next 21 years. And that moves it from, it was about mid-60, 65,000 to 13 million a coin in the year 2045. I'm getting more bullish on that forecast, but I'm certainly comfortable forecasting 30% a year ARR on average for the next 20 years. I think Bitcoin's up 57% a year for the past 4.5 years. Again, that's double the Mag 7. That's quadruple the S&P. That's, it's 8 times real estate, and bonds are down 4%. So Bitcoin is smashing everything, Joe.
Hey, Michael, you keep popping up in my feed. You've gone viral with some comments you made at the Bitcoin 2025 conference in Las Vegas recently. And it was where someone was asking you about proof of reserves for strategies, 567,000 Bitcoin. You said that that was not a good idea. You don't agree with it because you think it's a security risk to actually do the proof of reserves that way. But there have been a lot of critics in the Bitcoin world about that. They say that snubbing audits like that flies in the face of Bitcoin's founding principles, which are verifiable, transparent ownership. And they say for a company that has its entire business model around Bitcoin, that stance raises some eyebrows. What do you say to that?
Crypto Twitter is very colorful, and we have these fun back and forths. The highest standard of in this case, transparency would be a public company audit from a company like KPMG, where they're auditing both your assets and your liabilities, combined with officer representations pursuant to Sarbanes-Oxley about related parties and the like. And so we are a publicly traded company. Our assets are audited. Our Bitcoin reserves are audited by KPMG, as are our liabilities. I think that, we're always thinking and considering, is there a way to do proof of reserves in a secure way? We're not enthusiastic about publishing all of our wallet addresses and having people track them every minute by minute, because it exposes our custodians, our counterparties, and our own employees to more IT risk. But we're considering it. We're thinking about, is there a way to do it with a zero knowledge proof? And we're also always thinking about self-custody and what is the right way to manage custodian risk. And I think what you see is there's the OG crypto advocates who developed a bunch of very strong ideas over the past decade, and there's an emerging class of institutional Bitcoin holders like BlackRock, like the ETFs, and like the Bitcoin treasury companies, and they're focused not just on the assets but also on the liabilities. We have to audit and publish those audits with 10Qs and 10Ks.
Hey, Michael, just very quickly to follow up, Binance's former CEO, Changpeng Zhao, made some kind of cryptic comment where he said he probably sold Bitcoins. People thought that was referring to you. I am certainly not referring to Changpeng Zhao as some paragon of virtue, but just to be clear, that's not the case. You haven't sold?
No, I've never sold any Bitcoin. I haven't sold my personal Bitcoin. The company did a tax wash transaction for a de minimis amount of money many years ago, but the company has accumulated Bitcoin, in every period since we began this journey.
Michael, when I heard that right now ECDSA signature breaking would only require 1 million qubits. I'm speaking your language now. I have no idea what I'm saying. Down from a previous estimate of 13 million qubits. Theoretically means that private keys from public addresses could be broken. Shor's algorithm could be gotten around by quantum computing. So quantum computing, at some point, could break the algorithm for Bitcoin. Are there countermeasures that they could be put in? You probably understand what I'm asking you. Do you worry about that? You look like you slept okay. You look like you slept okay last night.
It's mainly marketing by people that want to sell you the next quantum yo-yo token. But look, Google and Microsoft aren't going to sell you a quantum computer that cracks modern cryptography, because it would destroy Google and Microsoft and the US government and the banking system. And at some point, I don't think it's this year, next year, in the next 5 years, but sometime 10, 20 years out, if there's a hyper powerful computer that threatens modern cryptography, the answer is Bitcoin network hardware upgrades, Bitcoin network software upgrades, just like Microsoft, Google, the US government upgrade all their messaging and banking applications. The key for everybody is Bitcoin's a protocol like the English language and base 10 math. When the quantum computer breaks your calculator and breaks your messaging app, you're not learning base 16 math, and you're not going to switch to a different language. You're just going to upgrade your software. And Bitcoin's a monetary protocol. We're just going to upgrade the software, Joe.
Wow. Because there are people that that throw that around that know, actually they know less than I do, I think. But so there are countermeasures to deal with that.
If I wanted to hack your Bitcoin, I'd send you an email saying a quantum computer can hack your Bitcoin. Click on the link to upgrade now, and then I'd steal your Bitcoin. It's 10,000 times more likely I'm phishing you than there is a threat. So now I'm not worried about it. Bitcoin's a protocol. The software gets upgraded every year. The hardware is being upgraded continuously, and it's the hardest thing in the universe to hack. They will hack your banking system, your Google account, your Microsoft account, and every other asset you have, much sooner because they're an order of magnitude weaker.
Okay, great. On Halloween, what color tie do you wear?
Look, we're all orange. It's the orange
It's
wave,
always
Joe.
orange. So even on Halloween, it's just an orangey, it's an orangey sky. Yeah.
There's an orange wave coming, and every public company has got to be thinking about Bitcoin on their treasury because, Bitcoin is digital money. What if Moore's law applies to money and your capital is doubling every 18 months? That's what the Bitcoin treasury companies have concluded.
You've got between 37 trillion and 50 trillion reasons to buy Bitcoin, I think, don't you? You probably come up with that. 37 trillion and counting.
Look, Bitcoin is the future.
Yeah,
Bitcoin is the future, and it's the opportunity for everybody.
Thanks for coming on today, Michael. We'll see you later.
Yeah, thanks for having me.
Okay.